Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 8th, 2025, and we're diving into Sylvamo's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sylvamo, known as the world's paper company, has just released its Q2 2025 earnings. It's an interesting report, especially given the challenges they faced this quarter.
Revenue and profitability overview. Let's start with the financial highlights. Sylvamo reported a net income of $15 million, translating to an adjusted EPS of 37 cents. How does this compare to their previous performance, John?
Well, the net income and adjusted EPS are down from the first quarter, where they reported $27 million and 65 cents, respectively. This decline is primarily due to the heaviest planned maintenance outages in over 5 years, which significantly impacted their operations.
And what about their revenue and cash flow?
Net sales came in at $794 million, a decrease from $821 million in Q1. Despite this, they managed to improve their cash flow, with cash provided by operating activities increasing to $64 million from $23 million. However, free cash flow remained negative at $2 million.
Operational challenges and strategic initiatives. John, Sylvamo faced significant operational challenges this quarter. Can you elaborate on these?
Absolutely. The company had a $39 million increase in maintenance outage expenses, which was expected. Despite this, they managed to offset some of the impact with $23 million in favorable operational costs and a $12 million improvement in price and mix, particularly in North and Latin America.
And how did these factors affect their volume?
Volume decreased by $9 million, mainly in North America. This was partly due to lower export sales, but the company is optimistic about a rebound in the second half of the year.
Future outlook and strategic investments. Looking ahead, what is Sylvamo's outlook for the third quarter and beyond?
Sylvamo is forecasting an adjusted EBITDA of $145 million to $165 million for Q3, expecting significant improvements due to a $66 million decrease in maintenance expenses. They're also investing $145 million in high-return projects at their Eastover mill, which should enhance their EBITDA by over $50 million annually.
And what about their shareholder returns?
They returned $38 million to shareholders through dividends and share repurchases this quarter, with a declared dividend of 45 cents per share. They still have $42 million remaining on their share repurchase authorization.
CEO's perspective and market conditions. What insights did the CEO Jean-Michel Ribiéras provide about the company's performance and market conditions?
Jean-Michel Ribiéras emphasized that despite the challenges, Sylvamo delivered results in line with their outlook. He highlighted that with 85% of their maintenance outages behind them, they are well positioned for a stronger second half, expecting improved demand in North and Latin America.
How are the market conditions affecting their operations?
In Europe, demand is down 8% year over year, and in Latin America, it's down 2%. However, North America remains stable, driven by higher imports. The company is also monitoring currency fluctuations and U.S. tariff situations closely.
Key takeaways. In summary, Sylvamo faced a challenging quarter but managed to deliver results in line with expectations. With strategic investments and a positive outlook for the second half, they seem poised for growth. John, any final thoughts?
Sylvamo's focus on operational improvements and strategic investments should position them well for future growth. Investors should keep an eye on their performance in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sylvamo's performance in the comments below.